blank chart. Let me remove drawings. And we're just gonna kind of go do like a practice run. And this is gonna go back into like logic flow and stuff like that. I don't know, like, yeah, sure, this looks good. I don't know, picking a random spot on this, going down in time frame. So just kind of start analyzing this move a little bit. So now what we need to do is we need to start with logic flow at the beginning of every assessment that we do. We always do logic flow. So that's what we're going to do today. I'm not going to use all my time frames. The only thing I'm going to do is mark this 1 4 hour, and that's it. Beyond this, I'm just going to, and for no reason other than I just want one master time frame here. So like what I'm going to do now is I'm going to try to do this logic flow on this chart as best as I can to see where this thing is going. And then I can kind of show you how you want to create micro strategies, because the end goal should be that you have 10 different kind of micro strategies that make you money. And if each one of them only fires once a week, like say you wanted to play origin levels, right? Like, okay, here's an origin level right here by the looks of it on the hourly. It's hard close, so that one won't work. So then we would be something like this. Okay, so origins might not work. Let's try a topside origin. You have something like this is, I think, looks like on the 15. Let's just double check. We got to just find our first kind of moment here to start with. So it won't be this because that's hard close, but it could be this one right here. This is your origin level. This is polarity in the move to a point. Let's see in the hourly here. And you've got this one here as well in the hourly, but that's hard close. You can't use that. And is this one past it? So okay, you got 15 minute, you got an hourly. So the 15 minutes always going to be correct here, but you could break the 15 minute in the future and have the hourly still in play. So we're just going to leave it like this. So like we've got a few levels. And if you were to say like, I'm going to play this origin level, okay, fine. So created here, what is this? November 15th. 3 days later, 15, 16, 17, 18. Like this may take a week or 2 weeks to hit. You can't wait 2 weeks for one trade. But if you took this trade once a week or once every 2 weeks, and it's a highly successful trade, and the probabilities for this thing to actually give you profits are a high success, high quality trade, well, that's a really great micro strategy to use when you can identify what the right level is and how to play it, right? So then that's one micro strategy. Another one might be like the interior trend off of that. So like this, so like buying the breakout when it goes long, like right there, that could be another one. But again, you know, 15th, 16th, 17th, you're not waiting 2.5 days for one trade. Like that's not reasonable. But over the course of a week, if you had 10 micro strategies, you might have 10 high quality positions that have like a 90% success rate. So even just as a baseline to your profits, you should have these kind of like automatic profit spots, these kind of moments where, and then like on this side here, you'd be hold level right here. You can even see the polarity. It's right there. You'd try to hold that. Even this backside right here, if you wanted to combo it and so forth. Anyways, doesn't matter. You want to have these like micro strategies so that you constantly have the ability to say, oh, I know this level, I know that level. So like that's going to be one of your goals, is to take your pile of winners and pick your 10 best, strongest theories and start integrating those into your game, right? So let's do this now. Let's create the kind of perfect logic flow. So I'm just gonna, like I picked a blank spot on the chart. I just kind of want to go through this thing and I'm just gonna see, hey, like this was polarity in the move here. Obviously you can see there's some kind of, this is like, it looks like a 15 minute, maybe 15 minute hold level, nothing there. So it wouldn't be here either. So then actually you'd have like your range trend from here to here. That breaks, your hold level has to hold. If this can't hold, then the move crushes. So that's fine, which gives you polarity on this move would be like this level losing. So it'll give you like backside right here. So that's kind of your first point of polarity. And let's double check the hourly here. So that's your first point of polarity. So actually, let's go back into this because I want to see where the range exists. So the first thing I'm doing here is I'm going to see if this 15-minute level is inside or outside of this hourly. Like if I had a 4-hour candle, these might both be in it. So obviously this is happening outside of it, right? Like this is beyond that. So what you'd want to do is you'd maybe want to say like, okay, this is test. So you have an untested combo range. Like this looks good, right? Hold level here gets hit, gives you your reverse, which would be this one next, which you can't tell if that's hit, but this is hit there and that's it. Like you end up going right there, combo range. So that's the first one. So like if I'm really good with combo ranges, that's where I'm going to want to take a short. But again, this isn't going to happen for a while. So we got an hourly, a combo range. You've got polarity happening here as your next hold level on the hourly. So that's fine. This is being tested here. You've got this here, which is backside. That's untested to the front side. So you got a combo here. Backside, front sides being all hit at once. So that backside I like, and so forth and so forth. So now with this tested, I don't have like a crazy range trend yet, because this wouldn't actually be your range trend. Your range trend would be when you go and back test this from like here to wherever that test is. So we're not quite there yet, but we do have possible hourly range trend here, breaks there, and you're there. So that's not going to help me either. So okay, so trends aren't going to help me here. There's no possible trend work. So I've got my hourly level combo, reverse trail. Now I need to kind of start to understand what part of this range I'm in, right? So you have different parts of this range. Like this is part one of the range up top, part one of the range on the bottom. So these are your like your ones. Like this is the first range, second range would be here. So this is 2 here to this range here. Originally it was this was your 2, right? That was originally 2, but then it kind of shifted down here. And this is your second part of your range, right? So now you have like your first part of your range, your second part of your range, your third part of your range now is right here against this, or you can even extend it to here because this is just laddering that range. But that's kind of your third part of your range. So like 1, 2, 3. So those are your like 3 parts of your range. So let's delete these circles, get a little bit more clarity here. So oh shoot, I needed that. This one there, this one here, this one here. So like I know if I'm going to start breaking above this, I'm in that part of the range. Like right now I'm in kind of this number 3 range, which is right here. Like I'm in this 3 range. That looks like a B because of magnet tool. Okay, so let's try that again. I'm in this part number 3 where I pointed the arrow there against this piece here, right? So like now I need to understand that if I, break out of this range here, I'm not going to gap up to here. I'm going to gap to this part of the range. Like I'm not going to immediately just like break this and just go straight up here. Like I need to be in this third range. And what will tell me that is, first off, we're going to go and we're going to take this replayer tool. We're going to cut it right here because you created at first what would have been your floating level. Like this would have been interior range 2 to 2, because originally range 2 would have been here. And then you're like, oh, great. We now have a floating level off of this back test of this reverse and all this stuff here. It's a hold level. It's fine. So like now in the charts, we would have went down into here somewhere, right? Like you would have like something like this. I don't know, wherever that hold level is below here. Like, I mean, I guess we could go find it, but yeah, like you've got backside, front side combo levels. Probably just go for the front side here, especially if you're going to lose a range. I wouldn't say you bounce the backside. I wouldn't say you lose this range to bounce the backside, right? I would say that if you're going to lose this range, you're going to have to go and hold the next part of the range. So your 2 actually has to be reestablished. So that's like kind of like the first thing I would look at. So then I'm going to go to the hourly, hit play here, see kind of what happens. So when I lose this trend, it's obviously like it's losing this range, right? So you're going back down to here to try reestablish that 2. So the 2 reestablishes if it gets bounced. So, and it doesn't break below the number 1 here, because if it broke below the number 1 and it went down here and held, you would have to re-establish your number 1 range in the move, right? Because that's the top of the range. This would now become the bottom. So now, oopsies, what I want to do is I just want to keep hitting play. So you can see how this range is trying to hold. It's trying to ladder this. And then again, you'd probably likely be down here. You might be at the backside, but I would probably just go deeper in the move. Yeah, and you do go almost right to that level. So if we go back to that 15, it might even be the wick of that move that got hit. No, that is the wick we hit. So pretty good anyways, though. There's like, I don't think that's too much of a difference. The point being is like, that's where the range is going to test, right? So that's like the first thing. Oh, that is quite a bit. We're just zoomed out. And that's okay. Anyways, that's that thing where that range, it's being created, right? So like now you've got your 2 here, which is against this number 2. Let's move this properly to here, right? So like understanding the way that these ranges get transferred and made is pretty important, because now you're in this move and you're not going to break out of this and all of a sudden just be like ripping up here. Like this range is already hit here. So your polarity is somewhere in here as an origin level. Maybe you created an origin here. Maybe, I'm not really sure. Yeah, it's like right here. You back tested this, but this creates an origin here. There's no hard close. So you'd be like origin level here, 15, and you would be hold level there. So I think that gives you a lot of good information. I think if you touch the origin level, you're trying to set up a breakout. So like the first scenario is on these 2 trades. It's like if you hit this, you're trying to like back ladder some type of, polarity back here, and then to ladder up and break, right? So that would be the first thing if you hit that origin. If you hit the hold level, you're just never hitting this, and that range is now creating a range trend and continuing, because now you've got this range trend. So there's like a couple different implications that hitting this equates to, right? So let's just go to the hourly. And I think if I was playing this trade, I would be looking more to see what happened with this current 15-minute origin. Like if we were lingering above this 15-minute, I would probably go for this origin, because I think you'd break that and move up against the origin to try to create this like pretty aggressive ladder. If you just kind of spike up fast, I would probably go for this backside at 282. Would I adjust it to the front side at 335? I mean, you're hitting the level there. You've got backside here. You've got polarity right there as well on the move. Like whatever localized origin this is right here. I think I might just go for this 290. I think 290 is appropriate for a first knife catch. Okay, so we're hitting this origin level. So now my opinion would change a little bit. I would be like, okay, we're hitting the origin level. We kind of need to break above it and close. So we're still okay for 290, I think. We're still okay. Come on, Bitcoin. What are you doing here? It's that hold level, the one that we marked out to hold this move. Okay, so we're kind of getting to a scary point now where I don't even know if we're going to start going after these levels. It started to ladder down the move. So you've got this here. So that laddered. So now you're in a reverse trail. So maybe this is your next short. So I think at this point, what you're going to do is have you held this ladder? That would be the first thing I'd ask. You've actually held this ladder point. So let's delete this. You've actually held ladder. So I don't think I would be going for the reverse yet. I think I would still be here at the origin. I don't know why I have that not as a dash line. I think I would still be at this origin now. Or would I just be laddering the move to here, ladder to there, ladder to here? So that 15-minute goes there. This ladder's here. So I don't even think this reverses the smart play. I think that laddered this, and I think now you're here. So I think if this holds the move down, you've got to go short. If you're even going to get there. I don't even think you get there. So like, here's a situation where this is kind of actually perfect in a way, because this is a situation where you mark these levels and you never took any trade. But if you're going to, and I'm going to explain this on a trend, it's the best way to do it. If you're going to have a trend, for example, you're going to have like 5 outcomes on any given trend. And we can go look at trends, and they're like 5 is a good round number, but there could possibly be 6, 7, 8. But anyways, the point of this is a trend is going to do we'll stick with 5. You've got 5 outcomes. Outcome number 1 is you front run the trend like that, which is what happened here. That's outcome number 1. Outcome number 2 is you hit the trend perfectly and you bounce it. Outcome number 3 is you deep dive the trend, but not quite to your level, right? You deep dive your trend, but not quite to your level. Outcome number 4 is you deep dive to your level, right? Oh, actually, let's back up there a second. Outcome number 3, let's redo that one real quick. Outcome number 3 is you deep dive to your level, break below trend, but then you end up closing above it and holding trend. Outcome number 4 is you hit that level and close above trend. Outcome number 5 is everything else, where you either dump the move or you hit one of these levels and you bounce back and back test this. Out of all of these trades, if you were to play every single one of them, there is only one trade type here that you will never lose money on, or very, very infrequently. So if the scenario from left to right goes, this is 1, 2, 3, 4, 5. Do you know which scenario is the scenario that you are very rarely going to lose money on? The highest quality position type that would have like a 90% success ratio. Which one would you think it is?
Let's see. I'd say the number 2.
Number 2. So hitting trend exactly and bouncing off of it. This one here.
Yes.
No,
Yes.
that's incorrect. So this position here is the only position out of all of them that has like a 90% success chance to win. If you set your trade on trend, you're going to miss it here, get filled here, get out of the trade here, out of the trade here, out of the trade there, right? If you set it, so there's only 1 in 5 scenarios where this one actually makes money. And if you were to take it every single time, you have 1, 2, 3 trade types, like trade type number 3, 4, and 5. You have 3 trade types that will completely fail you. So your success rate is going to be very low. It's extremely high variance. Same with this. If you front run a trend, you're simply never going to get filled. And the times you do get filled, there's a high variance. So kind of left to right with this, the way it works and the way you have to think about it is the more left you are on the charts, the more variance you're introducing, because the times you do get filled, number one has 1, 2, 3, 4 times where it's not a good idea. Number two has 3 times. Number three has 2 times where it's not a good idea. Number four is the only scenario where you would take a trade, you would not get filled most of the time, but the times you did get filled, you would have an extremely high chance to succeed. And then the same with number 5, it's actually then the scale starts going backwards, because if you're going to say trend is dumping, you would short it. So if you shorted right here and trend is dumping, you would have this time when it hits that and bounces off is a bad thing for you, this, and this. So actually all the way to the right has a really bad chance at success. It's why we never buy trend breakouts, because it's like flip this thing on the other side. And if you're trying to buy a trend breakout, how many times does trend like start to get over and then just fall down, right? So it's really interesting when you think about a graph like this, because everything from left to right, highest risk on the left, lowest risk on the right, except when you get all the way to the right, because if you're shorting this, then there's 4 scenarios out of the 5 scenarios that will actually get you a net loss. So number 1 and 5 actually share the same kind of statistic routine, right? So out of all of these trades, number 4 actually only is the only trade that will give you a constant high quality position when you are in it. The trick is that it's only going to happen 1 in every 5, excuse me, 1 in every 5 to 10 times. So it's a type of position that you will usually not get filled on, but it's okay, because no money risked is no money lost. If a trade misses, c'est la vie. You were never in the trade. There's no money to make anyways, and your variance is low, but the success rate of this quality of trade is high. So if you're never in the trade anyways, but 1 in 10 times the trade does work, if it has a 90% success ratio, if you attempted to take this 100 times at every single trend, out of those 100 times, 10 you're going to get filled, 9 of them are going to be winners. So do that over a month, and how many of these scenarios do you buy, right? Like you could get yourself maybe into 5, maybe 10. I don't know. It depends how often you trade. I guess that's a question of how frequently you're trading, right? So now this is really interesting, because this trend becomes something where you can kind of blatantly see where it makes the most sense to take profits and make money, right? So you have to start thinking about every single thing that you buy in this regard. Just like when I said before, now we have this origin level up here. I think I would take this hold level if this spiked right up to it and broke down, because now you're talking about this becomes a high quality position based on what's happening in here. Just like this trend will become a high quality position based on also what's happening in here. The thing they have in common is they both are analyzing the current part of the move to make sense of what is the highest quality position, the one where I can make the most money, and therefore just subjecting you to like a logic flow queue where you're just inside of this logic flow thing. Again, here as well, if I was going to take number 2, it's only going to hit 1 in every however many times. Like once in a blue moon, this is going to hit. But when it hits, I want to be in it. So if you had 10 strategies where you said, okay, there's this origin level that makes sense right here. This is a good one to buy. I don't know, like we'll pretend it's this. This is a good one to buy. So that would have been like a high profitable, successful trade. Like you have origin levels that you're buying. You have, oopsies, that's not the right one. Let's remark this origin level here. You have origin levels you're buying that are happening once in a while. And this one was nice because it happened kind of within, looks like about 12 hours of this happening. A little over 12 hours, the third hit. But at least it's something that's one highly profitable quality trade on the day that will net you a certain result, right? So this is where you have to use logic flow to start defining the entire part of your charts. Like you define all of your charts from head to toe. And then once you've defined your charts, you are now picking between the levels that make the most sense. So we can just hit play. And we're going to go do this on another part of the chart, because the first part of the chart, I wanted to explain that to you and how that happens. Like hold level here, great little scalp trade, right? And then you have to also like 1.6%, beauty. The problem now is we've got a 2 right here. Actually, the problem now is this is actually not even a 2, it's a 1. So when your 1 restabilizes, just a note on ranges, when your 1 restabilizes, you're going to have a large move up because you are trying to stabilize the beginning of a range. Just like this stabilized move here had a large move up. This right here, if you were actually to rewind to this, this is a good example of a floating level because this right here would have triggered the float up top. So if you break down below this, if you were good at floating levels, you wick down below this, you would look at the top of this range and just say, oh, what's the highest time frame untested? It's the hourly right there. That's a perfect short. So in the scenario where you're really good at floating levels, you know that once this happens, this short makes sense, not a combo level, right? Because now you're in a floating level scenario. Is there a 4 hour here? Yeah, there actually is. There's a 4 hour, but the 4 hour test can go all the way here. And you've got a 4 hour right there. So you start your 4 hour level here. So let's back that up. I don't even think there's a point to mark this 4 hour level, but that's fine. We can do it. 4 hour levels holding it down. So that's already now tested. So this is completely gone. So you wouldn't even use that. So when I break below this, still the range, there it is. Now this floating level makes a lot of sense, right? Hit play. Okay, like even better. That's fine. Get above this polarity here, gap to the floating level. Or even if you wanted to go lower time frame, more advanced, you would say break out of this and use that as a trigger. So now if you were to say, oh, when you break above this, like you should take a long right here, this should be your entry, and the loss of this should be your trigger out in profits. So let's see how this plays out. Good. So like now you're like, oh, I just broke polarity, I should enter here, right? Like that's fine. That would be technically correct, but very late to the party, right? So like now you're sitting here saying, oh, I broke above this. It was kind of polarity. If I backtest bounce it, that should be entry. So your entry was actually right there, which is good. But actually, if you broke above this, you could have taken entry here and used that as a trigger out, because you should just, relatively go straight up now. Oh, you actually got entry on that. That's sick. You actually got second entry. We can delete those. And floating level, right? So if you were good with floating levels, this would be very easy to recognize that this wicked passes and creates a floating level, like right on that hourly. Like it is very, very, very straightforward, this one. But you'd have to be good at floating levels. If you weren't good at floating levels, you would never take that trade because you wouldn't understand and identify. Oopsies, that's not the right one. You wouldn't understand and identify that part of the chart. So you couldn't say like, oh, this floating level makes sense because. But here it clearly does. And then to the creation of your range. So even if you were to go there and say like, oh, let's take this trade here. This is the hourly hold level. That's fine. That's perfectly acceptable for a take profit spot. So then your take profit would be just like from here to here. Floating level, nice 8%, easy peasy, and it should just go straight down there. Yeah, it does perfectly, right? Like it's just the floating level is very easy to see here. There's not much to it. The range number one gets created. You have a floating level here that will continue to allow it to move down. So you're still trying to create the number one. So if those floating levels are holding, you're just still trying to create the number one. Let's just get through this thing a little bit here. Your number two would have been here at that point. So you've got number one there. We're just going to leave the two there. And now number two goes to here, right? So you're like kind of range transferring at this point. Yeah, that's cool. Go to all these different things up here. Nice, nice, nice. This takes so long. Oh, wait, did we actually miss? We missed this. Wait, no, because no, that's fine because we broke below this range. That's right, because we had that trend there. And now we broke below this range. So we can actually just delete this one, or did we never break below this yet? I swear we broke below this. Oh no, that's right, because range two was here and we didn't. Okay, so we need to back this up a bit. That's right, because we were talking about range two. Range one is here. It's still in play. You've still got like this right here, right? So you've still actually got this range in play. I don't think you reestablished the number. No, you actually never reestablished that. Okay, so let's just rewind this. So I thought you were gonna break below number one. I thought for sure this here was gonna like lose this range and restabilize. Oh, that's fine. No, you've got range one here, right? Range two kind of goes right here. At this point, now you're back to analyzing like which trade makes the most sense here. So you've started to stabilize the range. You're probably going to go test back more up in here, more up in this part of the move here, and reestablish this number two. Like if you were mirroring, right, number two would be here. And if you reestablish this number two, I'm assuming the next thing you would do is keep this trend here, make that trend off the number two touch of this combo level, because the floating level has been tested. So you don't use your float anymore, right? That's the float. You've got a combo level. You've got also this that could hit, which would be your 4 hour origin that could be created. But if you're going to create that, you're likely going to go over top of it, which is over this, and move down. So you never went below this. So I wouldn't assume that as a first. Not that I use that as a hard guide, but if, given the choice that I'm using a combo level, an origin level, a deep dive to create this as a break level at first, the deep dive to create it as an origin level, all those things together, I would just simply assume that you just went and would test the level. And I might further that by saying, okay, what level did we test in this move? Like, did we test the 15-minute level? Because we have a 15 combo up there. So like, do we have a 15-minute level here that was tested? You have, let's just mark all the greedy ones. You have this here as a 15. And if this is what was tested, then I would simply just say like, oh yeah, that's easy, untested level on the top. Break level, question mark. Break level. So you created an origin here. Okay. Let's delete that. Let's just make sure I'm seeing this correct. Did you test that there? You did. You tested it, created trend, went below it. Okay. So I would just assume you're going to hit a 15-minute origin up top now. That one's broken. There's nothing here. So you're either here or you're here. Simple as that. I don't like, do you have two right? You have this right there, but no. You tested an so I would assume one of these, 402, 495. What's the spread? 50%. You could cover both levels at 50%, but that's kind of messy. What I might do is I might go for this, try to see if there's an hourly rate here. There's not. This is also an hourly rate here. Is it also the 15? It's kind of part of that 15. Yeah, it's that deeper 15 because this is the hourly. So that would deep dive this to test this hourly to pull back below this 15 right here. Because this one's broken, so it can't be that. This one's broken as well, so it can't be that. So you've got like 1, 2, 3. So you need to RA this, like 402 to 495, 445. So I think like 440 would be the right buy spot, just floating 5 minutes below that, I think, because that'll target that, fall short. But like maybe, I don't know, like 439 might be the right buy here if I had to guess. So I'm just using that as a mirror on the bottom. So like out of all these, I would place a buy at 439 and let's see if it gets hit. Right? Because that's the logic flow I'm using here. I'm looking at this transfer of ranges because this range kind of transferred from here to here. I want this range to be recreated as well. Okay, so let's go to the hourly. Play here, see what happens. You could talk about the longs down here, but I just want to do one side of the chart at a time. Hourly hold levels hit there, so you're never using this now. These are gone. That's gone. Come on. Taking too long. Let's go to the 4 hour. That hourly level's holding it. You actually only hit that 15, so I would have missed that trade. Wow. So you actually only go after that 15-minute level there, the 15-minute combo. So I would have missed this one, but it's I'd rather miss a trade than lose money on a trade. I can tell you that. Oh, it went for the hold level, untested hold level. So actually, this is probably moving down then long term because it's laddering down on the bottom, breaking the origin on the bottom side, right? Is this what it tested? Is that? Yeah, okay. So now you have 4 hour trend, hopefully. Nope, do you have an hourly? Yep, that's fine. So then you could put that there and that'll be your guide. But this looks like it's going to break down after. Like this looks like it's actually going to fall because you're laddering the top side, but trying to attempt to break the bottom side. So like, I mean, kind of straightforward, right? Now let's see how this kind of reacts. We're not going to worry too much about like taking shorts. You could get into like where you would short up here, but honestly, just think this is going to fall. Let's go to the daily here. This is taking too long. Oh, it actually breaks up. That's crazy. All the way up to 23. So how could you have seen that? Like that's the first thing you would have asked. You would have been, I wouldn't have taken any shorts here. I think it would have already been over and done with. You could talk about longs, but like where does that exist, right? So range. So now you get back into ranges, right? Like let's go through this. Let's make these clear for the higher time frame. I just want to delete that. That's fine. So this is number 1 right here. Like this was your first range was actually here. That's number 1. This is something we couldn't see before, that you actually broke above the higher time frame range right here with this. So that's something we couldn't see on the other time frames, because when we were on the 4 hour and the daily, right, like you couldn't see that, because it just looks like, okay, range here to here. But that's fine. I wouldn't expect that to, you know, be the delimiting factor of the move. And let's mark this out as daily, right? So just starting high time frame down, like your normal like time frame down analysis. Daily, 4 hour. So one of the key factors here is that you started to create the second range, and you have your range number 3 down here. So you have like 1 here, you reestablished 2 here, which actually would technically be here, because this isn't its own independent range. This trend represents that number 2 here. So this is actually your second range. And then your third range would be this stuff in here. So this is 1, 2, 3. So I mean, I don't really think there's too much to say about this. I think the writing is on the wall. You've got range trend here, right? Like whatever you've back tested in here creates your range trend on the move. Range trend holds the move. It breaks up like 1, 2, 3. You're laddering the move from here to here to here, and so forth, up and up and up and up, right? Like there's no surprise here. Like you have a range trend and it's laddering up. Like this doesn't need to be analyzed. It's very, very basic, straightforward, right? Like number 3 is going to be some kind of combination in here. Third range trend. Let's go here, delete that one. Let's delete this. Number 1, number 2 would have been here. So this would have had to, if number 3 has established now, you would have had to create some kind of like hold in here to hold that move down. So the only thing you could do, oopsies, wrong screen. The only thing you could do is say, where could this ladder next? Like that's tested. This kind of looks like polarity on the move right here, to be honest. This looks like you had like a level here, and when it lost, it tried to gain this on the bigger time frame, these 4 hours. It looks like it tried to gain this, and when it lost it, you know, it creates polarity here. So then you'd have like a combo hold level polarity kind of thing happen there. Beyond that, is there anything in here that you would have polarity on? Maybe right here, but more likely your backside right here. You kind of have like 2 polarity spots here. I would be more looking at this one to create range 3. So if I was to duplicate this down here, this range 3, I would be more looking for it to happen here, because it kind of falls in line with the story of the ladder. So if I was going to short, it would be here. I don't want to see where the shorts exist on the right side of the screen, but if I was to short, it would be right here against this polarity. I might take a look at deep diving that to see if there's like a 1 hour origin there, but I don't know, because once you hard close polarity, like I wouldn't go after this, because what I could say about the logic flow of this, if this is polarity in the move, the last thing I want to do is go here, because you have a big drop that you have to make to get back below this polarity. It almost has to be like a crazy knife catch, like bump, bump, right? Like it almost has to be like this crazy knife catch off this level. So then what you need to do is you need to just kind of find something more local to say like, okay, yeah, fine. Polarity can gain here. And if it loses like just a little tiny bit, it's below polarity. So it's like, I'd be careful here with this polarized move, creating this number 3, because, you know, polarity is going to be only if it rejects. So I wouldn't take this here. If it does, it would have to knife catch right the hell down and not bounce above 17,709. Like we can mark this as possible polarity for the future. I wouldn't be taking this one here regardless. It's just not high enough in the range. I would want to go and create the range off of this. So this one I wouldn't take. So we can just delete that. And as we can see, it's like not a good trade anyways, right? So you're either taking your trade here or not at all, because I think like once you get into that, it's just kind of like no man's zone. So let's take the replayer tool back here and see actually what happened here. Go to like a 15-minute chart. Yeah, that's exactly it, right? Like it hits that polarity and pulls back, and like that's it. You're not deep diving this, because once you get up to this point where it's like, oh, this could be your origin level, like once you get up there, like I don't really like that it has to drop a full 1%. 0.8, that's still a lot, because it actually has to close under it. So you want to just be like 1.2% here and then be rebouncing this as a reverse. You can't be closing over it. So like this one, like I said, this never made sense, right? Like that cannot make sense. This here is like your first test of your short, and that's it. Like you test this and then that's it. You go to a 5-minute candle. I don't even know if you like, yeah, I might lose my replayer tool here if I go too far back. I lost it. Shit. I wanted to see the 1 minute if there's a, like we can see there's a bounce there. It's just we can't really see how much of a bounce it is. But like that would be it, right? Like This is a quick trade. Like it hits this, pull back, and that's it. There's no other trade here. Didn't look like you had too much time to get out, so experience would have had to be pretty high to get out of that trade. But then again, that's the only spot that number 3 can be created. It can't really be created up here because then you're just like 1, 2. You're just reestablishing this 2. And then if it holds the move, it just breaks, right? So like, yeah, you could have seen that this was moving up. Once this 3 is established, you stop shorting these top levels and you just look for the short that could create the same range on 3. And that would be it. Like that's your only short here. Otherwise, it's going to do something like this where it just breaks up and moves right outside of its range. You flip this chart over and you're like, oh yeah, of course this move like sunk to the floor. It just lost its trend, bounced its level, and then closed underneath trend. It's the same reason why taking this as a short or this as a long doesn't make sense. Like as a scalp, yes. As a scalp, yes, because you can hit the level, but re-entry is on trend. And it's on where trend holds. So like this is to that same point where if you took this as a short, that's fine. You can take it as a second short. But like again, trend, how many of these, going back to the example, this is scenario number 5 where you just bleed right through the trend, right? And why does that trend bleed happen? So, you know, this here, you take this short, if you took the greediest part of it, you're using this as a trigger. So like when you bounce this trend and start closing above it like this, like it's just gonna break trend and rip, right? So like if you entered here, it's just a scalp to here, and that's it. So that's where you have to be mindful, like what makes sense as a scalp trade on trend, right? So yeah, okay, you could have seen this ladder. I didn't earlier in the video, but you know, I also wasn't looking to see where the longs were. I just said like, oh, where would we short, right? But then obviously you can't just short everything. You have to make sense of the long side of it too. So that's kind of how I would look at this move and assess it in terms of like where my quality positions. And this is November 8th to January 14th. Like this is 2 full months. So there's a lot that's going to happen in between here. And for us, we can just analyze it, you know, at face value, but there's a lot that's going to happen in between there. That's not, you know, you're not going to be a month later taking 2 trades. Like there's other things you need to analyze. For us on a replay tool, that's fine. But you know, yeah, you need to find those quality positions, right? Like you need to create the logic flow and find the right level. Like I'll do one more real quick. Let's just find like a random spot on the chart. Go to, oh yeah, we're on the 4 hour. Sure, this looks good right here. Come on. Like try to find an origin level. This one right here. Origin level. What else is happening on the chart? Origin level here. Okay, so like 2 possible entries here. This one hits and breaks down, or this one hits and breaks down. Like we both know the chart's breaking down. What about daily? Is there any kind of daily origins? You have this here, which could also be a daily. So I would maybe weigh more towards hitting this 4 hour. Deep dive hits the daily to set that up for the future. So I would lean more towards that. So this we would say is the hourly, but actually the 4 hour existed first. So here we don't even use this one. There is no use for it. And actually this one's never closed, is it? So this is interesting because now you have hourly here. So which one is first?
Hourly.
Actually the hourly. Yeah, because it's outside of these candles. So maybe the 4 hour makes sense and not the daily. Like then I would be like, okay, well, what's the spread? If the spread is too small, I would just go for the hourly. That's a pretty small spread, 90% between 3 origins here. You got a 4 hour here. Let's see what happens below here. So you don't have any origins there. Do you have anything here on the hourly? You will have hourly is broken. So you don't have the hourly here. So all those are broken. So this will always be the 4. So I think if we're just going to go straight up, you would actually be going for the daily here instead of the hourly or the 4 hour, because you'd be breaking this 4 hour and you'd want to break the +1, which would be the daily. So you would set up the test of the +1 if you broke over this. So for that reason, I would ignore these 2 levels in the middle. So like if you were going to take origin levels here, now you know your 2 perfect buys. You want to ladder off of this to create a range trend. So somewhere in there. So is there now like a hold level in here? You've got the hourly here. Let's try to combo that. This one's never tested. Okay, good. 15-minute right there. I don't want to go any deeper than that because I don't think that you're going to actually get filled. So you could even mark both levels here as hold levels just in case. Like you would be taking the second one. Well, this was back tested here, creates polarity there. That's that. I think I would go for the wick of this, not the body in that scenario. So 31,208, yeah, it looks good. It tests the 4-hour, goes below it. If this breaks, I would take the daily. So like I'm just using origin logic here to make this decision. So I have two levels that I want to buy. I want to buy 31,208 and I want to buy 32,172. When 31,208 hits, it has to close below this. If we start closing above it, I'm out. See what happens here. I don't even know if they're going to hit. They might not hit at all. Oh, straight through it. Okay, so good. That's kind of okay. Let's walk through this. I went a little faster than I thought. So two levels here. This and the daily. So let's go to the 15-minute chart, see what happens. First, we need to see, what did this test? This didn't even really test anything. It just straight up laddered the move. That's fine. Oh, son of a... Maybe we can go to the daily so we don't spoil it. Okay, good. And then replay tool right here. Something like this. I think this is about good. Right? Okay, good. Now let's go back because I don't want to like spoil the outcome here. 4-hour. Okay, good. Right here. Let's go to the 15-minute. I don't think we have anything lower here than the 15-minute. So this is kind of exactly to the what I was saying, right? Like you would never play the 4-hour level. It's the same thing with a trend. Like you would never play the first level because there's 5 outcomes here. Front run the 4-hour origin, that's 1. Hit it directly, that's 2. Go past it, but if front run the other level, that's 3. Hit the level itself, pull back, and just blow past everything. So 5 outcomes, which outcome makes the most sense? Oh, number 4 again, because it's the only level that is the deepest in the chart that also can pull the move back without it being just a completely lost position. And then if you were to buy this one and just say, oh, let's just long here and then see what happens. There's 4 positions, like let's just long through the break. There's 4 positions on this chart that reject that. So again, this becomes a smart trade, right? So let's just delete these guys like this and then just kind of look at this. And the trigger here is like closing above the origin. So when you get above this, unless you're instantly pulling back and closing below that origin, like this here is, 75%. That's actually quite a bit. So you would have actually gotten liquidated on 100x on this one or stopped out. But then the key here is that, okay, fine. So say you're out of 2 trades, this is your first trade and it's a negative. So it has an X, right? So you've actually lost that position. But the next thing is when you close over this, that triggers the event up here. Just like earlier when I said, when this breaks, I would just go for the higher level because it needs to +1 it, right? So now you have your second trade. So once this breaks here, your first trade exists here, right? Like your first trade exists here. The second trade exists here. Looks like trade number 2 is pretty good, right? Like so out of 2 trades, 1 was profitable, right? So let's just hit play, see how this kind of pans out. Let's go to a bigger time frame. This might take a long time here. It's that, and then again pulls back. So that's kind of perfect because that's exactly what you would expect, right? The origin test goes above it, and then out of 2 trades on this side here, you've got how much does it go past it? 7.5, no big deal. Your first trade here, you've got like a full 3% on it, right? Like that's huge. Like you've got 3%. You can take the re-entry, but then you have to reanalyze like where does that re-entry exist? Like you ladder here, create second range. So you lose and trigger out 50% on this, and you make wherever you would say that your profit take is on this. Like, I don't know, fine. You could just say even 2%, even if you wanted to go 2%. Maybe you didn't catch the whole thing, maybe 2%. Maybe, you caught this and you just keep hitting this like little local origin, you make 2.2%. So you lose 50, you make 2.2. So you make 220. So you end up net 170 on this trade, right? But you know what I mean about, or do you understand why this level here doesn't make, that level doesn't make sense, this level doesn't make sense, this one doesn't, and this one doesn't. So you have only like 1 or 2 trades that actually exist inside of this that actually make sense to take. And it's like you're looking for those high quality positions. And if you were to measure these positions against each other, well, you would always be going for the larger position. So even if you clumped these as I'm taking 1 trade, so fine. At first we marked them as 2 trades. This is trade number 1. This is trade number 2. Fine, you're still profitable. Even if you were to RA this and say, I only want 1 trade in here, you would have just RA'd it like this. And you would have said, okay, this is very simple. If this is the greediest level, that's where I'm making my play, right? Like that's simply where I'm making my play. And that's it. So if you were to RA it and you were only to take 1 trade, it's a highly profitable position again, once again. And then even to, say just go to daily level to the daily level, you would be here and, you're 800%, 866%, or whatever the breakdown ends up being based on the leverage you use. But you see, like, even if you were to RA this, into a deeper set. Like you're only taking one trade out of two. You would never take only, so here's a big flaw I see people make. They mark all this stuff and then they go here and they take this and they lose the trade and they're burned out. They're like, oh, I'm so tired of my losses. I'm not going to take this. I need to step away. And then it's like they took only the poor quality position. Not that this was a poor quality position, but against this was a much smarter trade. So they'll go and they'll like, if you're taking number one, you're always taking number two here. You can never just take number one. The only spot you can take number one, and we just go back to the same trend example. There's 5 outcomes. This is the only one that doesn't lose money, right? Because outcome number one is you go in front of that. Outcome number two is you go in front of this. Outcome number three is you go past it. Or actually, there would be another outcome. Outcome number three is you hit it directly. Outcome number four is you go past it a little bit. Outcome number five is you break up. Outcome number four, where you go past it a little bit, is the only outcome where you constantly make money on it. So if this is going to create a break level origin, you are going to bleed a little bit past it. So maybe you combo to this. Like in hindsight, you wouldn't actually buy that directly, which I've said that a million times, but for some reason I didn't apply that logic here. But you would go here and you would say, well, what could test past this? Like what could be past this level, but not a part of the next move, right? Like, I don't know, let's go to the 15. Maybe there's like a little local origin or something. You've got that right there, but you've got untested body right here. So that is your reverse right there. Not really though. Like you got to start actually from back here. So you've got like local polarity. This one right here. You would deep dive to this. Great origin here and open this up for the future. There it is. You could also say the body of this to just ladder the move, but you already tested that here. And this next body is right there. So I actually just think you'd go for 585 here and you'd 585 and you'd front run that. You'd front run it a little bit because that would be a scenario where you don't really want to test this. So you just go like 572 is fine. That's fine. That's fine. Just going to go to the daily here and hit play because this is going to be a little quicker. So maybe you would deep. I think that's, pretty deep, but maybe you would have to, oh God, the daily was way too fast. I wonder if it actually did hit that 15. You have to check the spread too here. Like you have to check how much is, so you've got the 15 here, but this is already tested. So you never really want to use this. So you just want to use this. Like this is kind of, oh no, we don't want to do that. That's kind of it, right? Like, yeah. And it even front runs that. So you might have actually missed this trade. Well, I don't think the first one you would have missed. Like you got to check the spread here. This to this is 1.29. So it can never be that level. So you can't go that level. That's too high. So that's too high. This is also 0.97%. So that's too high. So you have to be within not liquidating your position, but somewhere, below that 50% mark, something like that. Well, anyways, not important, but you just wouldn't want to play the exact level. You'd want to just go a little behind it. So 175, if there's no level there, 205 is fine. Something like this. However far it goes beyond that, like then you have to go and do your research and look at your levels and this and that. Like I'm not going to say like there's always a 40% rule or there's a formula where it's 40%, like that's not the way it works. You have to find the level, right? So, but I think that this just goes all in the same, what we've been talking about this whole time, where you have positions that are quality and they make sense and you have to make sense out of the logic flow. So just using origin levels here and finding that it was like pretty decent because, I'm not sure whatever you end up doing with this trade after, I know there's like a pretty big movement. So, finding this origin here was pretty imperative, right? Like let's see, I don't know if maybe this touches again in the future here. This will be polarity on the move, right? So then like that would be, oh no, you're never touching this again. 32,000. No, you're not getting back there. No. Future, good future level stuff in here. Start thinking about that laddered here. So where's the next reverse? Like right here. Actually, there is none. It's just a straight up level. So you're now into polarity here, combo levels off of this back there and there. So you're actually into a different part of the move. But yeah, I think that's like a really good insight of like when you're analyzing like risk at a high level. So like doing RA at a high level and also using kind of like micro strategies to see where you're perfect, right? To find where those buy spots make sense. But this becomes a mixture of procedural and risk, right? Like PA and RA at a higher level all mixed in one.